This is Capital Clarity, a channel where we explain how money works clearly, simply, honestly. Most people do not avoid investing because they are lazy. They avoid investing because they do not feel ready. They tell themselves, "I need to learn more. I need more money. I need better timing. I need market clarity. I need confidence." And years pass. Today we are talking about one of the most powerful smart money habits. Invest before you feel ready, because readiness is often an illusion. There is always a reason to wait. The market is too high. The market is too volatile. There is a recession coming. Interest rates are uncertain. The economy is unstable. There has never been a time in history when markets felt completely safe. If you wait for certainty, you will wait forever. Wealth is not built in moments of certainty. It is built in moments of disciplined action. Feeling ready is emotional security. Investing feels risky. It involves uncertainty, volatility, and temporary losses. Your brain wants safety, so it delays action. But financial growth requires discomfort. The discomfort does not disappear when you feel ready. It disappears when you gain experience. And experience only comes from starting. Let us talk about time. Time is the most powerful variable in wealth building. If you invest $500 per month starting at age 25 and earn moderate long-term returns, the result can be dramatic. If you wait until 35, even with the same monthly investment, the outcome is significantly smaller. 10 years of waiting costs more than most people realize. Not because of the money missed, but because of the compounding missed. Time in the market matters more than timing the market. Waiting feels safe, but it is expensive. Most people believe confidence leads to action. In reality, action builds confidence. The first investment will feel uncomfortable. The second less so. The 10th becomes normal. Eventually investing feels natural. You stop checking prices daily. You stop reacting emotionally. But this maturity only comes from participation, not preparation. Many people delay investing because they want to optimize everything. They want the perfect portfolio, the perfect allocation, the perfect entry point, the perfect strategy. But perfection delays growth. A simple diversified index fund started early will often outperform complex strategies started late. Progress beats perfection. Investing does not require large capital. You do not need thousands to begin. Starting small has two advantages. It builds the habit. It builds psychological tolerance. When you invest small amounts, volatility becomes education instead of trauma. You learn how markets move. You learn how emotions react. You build resilience. Small beginnings create long-term strength. Let us be clear. You will feel doubt. You will question your decision. Markets will decline after you start. That is normal. Temporary loss is part of investing. Those who build wealth are not those who avoid volatility. They are those who endure it. Starting before you feel ready forces growth, and growth is uncomfortable. Another reason people wait is information overload. There are thousands of opinions, news headlines, YouTube predictions, market forecasts, economic fears. The more you consume, the more uncertain you feel. At some point, learning becomes procrastination. There is a difference between education and avoidance. Smart money habits require action. You do not need complexity to begin. A diversified, low-cost approach, consistent contributions, long-term horizon, reinvestment of returns. That alone, applied consistently, builds wealth over decades. The system rewards discipline more than brilliance. Ironically, waiting can create overconfidence. When people finally start investing after years of watching markets, they believe they understand everything. They try to time entries. They chase trends. They take concentrated risks. Those who start early often develop humility. They experience volatility. They learn patience. Experience builds realistic confidence. Investing before you feel ready changes identity. You stop seeing yourself as someone who will invest someday. You become someone who invests. That identity shift matters, because behavior follows identity. When investing becomes part of who you are, consistency becomes easier. Smart money habits are long-term habits. Investing is not about next month. It is about the next decade. When you focus on long horizons, short-term discomfort loses power. The wealthy think in decades, not days. This is the deepest fear. Losing money feels painful, but not investing carries a different risk. Inflation erodes purchasing power. Cash loses value over time. Avoiding markets entirely is not risk-free. It is simply a different type of risk. Understanding this changes perspective. You need discipline. You need consistency. You need patience. The feeling of readiness is not required. Action creates readiness. Momentum creates confidence. Time creates results. Investing is not about dramatic wins. It is about steady accumulation. Small contributions. Reinvested returns. Long horizons. Compounding rewards those who start, not those who hesitate. Most people wait until they feel ready. By then, years have passed. The difference between average and wealthy often comes down to one decision. Start now. Not perfectly, not confidently, but consistently. Invest before you feel ready, because readiness follows action, and time rewards those who begin early.